Nations seize assets as geopolitical risk escalates. Now, as the world is seeing inflation skyrocket, currencies are collapsing left and right, and it's being caused by unprecedented money printer on a scale we have never seen before. And guess what? It's not going to end anytime soon. As a matter of fact, the latest climate change bill is expected to spend $150 trillion. Yes, trillion dollars over the next few decades. And in a world of unlimited fake fiat currency, people are rushing to buy real goods with fixed and limited supply, which is why we've seen commodities shooting higher. Now, in this video, I'm going to break down the scary path that nations take when these situations develop, how it's already happening right now, what effect this has on our investments, what I'm doing about it, and what we should be looking at, paying attention to, and doing because of this. So let's go. All right, welcome back. If you're new to the channel, my name is Mark Moss, and I make these videos to change the way you think about money, because almost everything that we have learned is wrong, and there's a lot of, I won't call it misinformation, I don't like that word, but it's hard to get the right information today, and so I try to bring the best of that to you. All right, now today we are talking about, I guess, a world in decline. The world is changing rapidly right before our eyes. I like to say that the world we're going into is not the same as the world that we're leaving behind. If your traditional financial advisor is trying to say, over the past 60 years, forget all that. It's all changing right now. Now, a few of the key ingredients, I'm not going to recap this because I talk about it a lot in videos, but we've been seeing, obviously, debt levels are completely skyrocketing throughout the world. As I talked about in the intro, this new climate change bill, they want to spend an additional $150 trillion. Now, to put that into perspective, all the debt that the United States has racked up at this point is less than 30. And then they want to spend $150 trillion. Think about what that's going to do to the debt levels. And because of that, partly because of that and other factors, we've seen inflation run rampant. Prices are getting out of control. Asset price inflation, consumer goods and service price inflation are going crazy. We can see this. Here's a list of the top countries by inflation. Venezuela 1,500%, Lebanon 144%, Zimbabwe 55%. We could keep going on and on and on. And all these countries have double-digit inflation or more. And of course, when that happens, then we see currencies start to lose their purchasing power. So when prices are going up, it's not that prices are going up, things are getting more valuable. It's that the power of the purchasing power of the currencies are going down. So here we can see Brazil. Brazil has lost 75% of its purchasing power since 2011, which is pretty bad. We can see here Turkey, which is trying to do even better, 85% collapse just since 2013. So that means that whatever $100 used to buy now buys you about $17 worth of goods. That's what that means. And of course, we can see this if we look at like the FTX trading of currencies across the board. We can see just how bad they all are. Mexican peso, Romania, Czech, the Colombian peso, of course down here the Turkish lira being the worst, South African rand, etc. But all of these currencies are losing really, really big. And if that wasn't enough of a problem, the currency is losing value, the currency is losing purchasing power, it's causing lots of other problems. When they print that much money, it causes currencies to crash. We can see here, Turkey may not be the only country facing a currency crisis. Nope, almost all the other countries are facing that currency crisis. But when that happens, it starts to cause all types of problems, including supply chain problems, and even worse, we have a global energy crisis that is coming, and there's no quick fix for this. So what are the central bankers going to do? They're going to print more money. If that's what you guessed, then you have it right. Now, when there's an unlimited amount of fake fiat counterfeit money being printed, I say it over and over, people are going to rush to buy real, tangible things, all right? They want to buy real things because they don't want all this fake money that's just losing value. They want to buy things that cannot be inflated away, all right? Now, on top of that, there's policies that are being done that drive even more scarcity. Now, to kind of illustrate this point, we can just look at a commodity index right here. I think it's the USCI, and we can see that it is just continuing to climb. As a matter of fact, it's up 71% in just the year alone, up almost 100%, almost up triple digits, sitting here at near all-time high. And you can see people are rushing out to buy real hard things. We can also see headlines all over the news, Bloomberg right here. Commodity prices are surging again. 10-year high for gas, metals, and metals rally is what it says here, right? Central banks could be pressured to curb massive stimulus because the commodities are rallying so high. But it's not just that. Right, it's the scarcity plus demand equals higher prices. And so there's not enough of those goods to go around. There's more demand because of the money printing, and it leads to higher prices. All right, now here's the scary problem, right? When nations start to fall apart, when their currencies start to collapse, when they can't afford to pay their people anymore or feed their people anymore, bad things start to happen. All bets are off, let's just say. And so one of the scary things that countries tend to do is nations start to nationalize things, all right? And so they say, hey, forget this open market. We have to protect ourselves. We're gonna take over everything and do what's best for the people in this country. And unfortunately, it takes things from bad to worse. It's never the right thing to do. It's never worked before, but yet they still always do it out of desperation. And typically what we see is a changing of politics. So all throughout Central America, all throughout South America, for example, we see this happening. Chile is a perfect example of it. The country's gotten so bad that they've literally changed the government, changed the politics to a communist government, and they're in the process of rewriting a new constitution, a communist constitution. This is happening in Peru. It's happening all throughout there. Even in China, President Xi has now given himself a lifetime access of being a president. So politics start changing around that happens, and then, like I said, they start to nationalize their resources. Here's a picture of Venezuela is like the perfect example of this, how Venezuela struck poor. And this is the tragic and, of course, totally avoidable self-destruction of one of the world's richest economies. So Venezuela was one of the richest economies in the world because they have more oil than anywhere in the world, more oil than Saudi Arabia does. But when things started going bad, they nationalized the oil. So let's take over from all these private oil companies that know what they're doing, that know how to run them profitably, and instead let's install my brother, my uncle, my crony campaign donor, and let's put them in charge of everything. And what do you think happens? Well, it doesn't get ran good, and it starts to fall apart. That is what led to Venezuela, among many other things, led to Venezuela's decline. The problem is that this is the path that nations go down when things start falling apart. And as nations are starting to fall apart, this is the scary path that we'll see a lot of them go down. Protectionism around natural resources is surging and could spell danger for commodities. All right, so that's what it's, you got it right there. Over the course of 2020, 34 countries had seen a significant increase in resource nationalism. So all throughout the world, the mines were mining the minerals, the gold, the silver, the cobalt, the lithium, in all of those countries, but now those countries are starting to take them over, starting to nationalize. As a matter of fact, 34 did that in the year 2020. One of the latest ones, Fortuna Silver, which is one of the largest silver mining operations in the world, they had to fight what they call an unprecedented Mexico permit rejection. So in Mexico, which is a pretty friendly mining jurisdiction, not one of the worst jurisdictions in the world to say the least, they have rejected Fortuna Silver's permit to allow them to keep running and effectively shutting them down. This is jurisdictional risk, and you need to be careful when you're investing into that. Now, because of that, as you might imagine, capital is now on the move. I got capital on the move. As a matter of fact, in my private investing group, we had some exposure to some mines that were in jurisdictional risk, and we've been closing those positions out and moving those positions to other projects that are in countries that are more favorable, have less risk. And so we're doing it in my private group. I'm sure a lot of you have been doing it, but there is a massive amount of capital on the move, and it's looking for better jurisdictions. If you're in one of these countries, if you own a natural resource commodity company in one of these countries that look like it could have some risk, you should be paying attention to it. And so all this money is now moving to other jurisdictions. Now, when money moves, that's an opportunity, right? We want to get in front of where that money is. And of course, we want to go to countries that have strong private property rights. Right now, it's a scary thing all across the world. It seems like private property is under attack. But of course, you know, the US and Canada are still some of the best nations, although it's maybe not as good as it was before. It's still way better than most of the world in regards to protecting private property rights. All right, now I want to talk about mining in Canada. Like I said, Canada and the US are some of the best jurisdictions. Now, unfortunately, the US doesn't allow a lot of mining because of, the FDA and the whole climate change thing. But Canada still has a lot of mining going on. It's still one of the best jurisdictions going on. Now, I want to tell you, I want to break down this company to give you an example of what a good mining company looks like in a good jurisdiction. I do want to tell you in full disclaimer right now, this is a review, a paid review for this company. I'm definitely not telling you to go out and buy this company, but it is a good company that I thought would be at least worthwhile to take a look at with you here as an example, because like I said, a lot of money will be moving out of bad jurisdictions to good. Now, I do want to say, like I said, this is a paid presentation. However, I'm only talking about companies that I think are good, that I would invest in myself. I get hit with 5 to 10 offers a day to present to you, my audience, and of course I don't do that. So anyway, that being said, this company is called Prospect Ridge. You can find it here at this stock symbol, OTC. And one of the things that I love about them, besides the fact that they're in Canada, which I think is a great jurisdiction, is that they have one of the biggest. They have a massive land package, which means they have so much land they can find so many good areas to mine. We can see a good picture of that represented right here. One of their big projects, of course, is called the Holy Grail, which is pretty amazing, and it's in this area of Canada. And then they have this other Galeen project, which is this whole area right here. 2 really good areas to mine inside of Canada. In addition, they've already been able to find multiple deposits across these, so they have lots of potential there in the ground. And as they've been doing their surveys to find out what's in the ground, how good the veins are, how much they could potentially pull out, they've been continually surprised by how good the results have been. They've, in their own words, they have been amazing. And it looks like this could be one of these once in a lifetime stories where we have the big land package with great survey results, and then at the same time, all of this capital moving back to safe jurisdictions. Everything could be lining up for this country. Now, one of the shortcuts that I like to do when I'm investing is anytime I look at a deal, I want to know who else is in on the deal. I don't want to be the smartest guy in the deal. I believe that successful people will continue to have success. After you have a bunch of wins, you don't want to go to a loser. And so one of the best things that you can do with investing is to invest into people, always into the people. And so this is one of those good examples. We have Mike Iverson. He's coming out of retirement to take on this project. So someone who's had lots of success throughout their career and has retired and has done well enough to retire is actually coming out of retirement just to take on this deal. Now, he has a history of success, and I mentioned earlier the problem with Fortuna Silver. He built Fortuna Silver into one of the largest silver companies. So he's got a massive track record of success, has built some of the best silver companies in the world, and he's dusting his shoes off to come out of retirement because, as he says, he believes this could be one of the best deposits in the world. Now, I've looked at a ton of gold mining and silver mining projects in the last decade. I'm definitely not a geologist, I'm definitely not an expert, but when someone like Michael Iverson comes out of retirement to take this on, it usually is a pretty good sign for me, and it helps look at a couple things. He has 30 years of executive experience in public markets, so he knows how to raise money in projects like this. That's one of the big pieces. Are they good promoters? In 1998, he founded Naya Gold Mining Corp. Then he co-founded Fortuna Silver Mines, which we were just talking about. Of course, he also had Volcanic Gold Mines. And Val d'Or, following the company, was acquired by Oban Mining Corp. He has achieved, in the aggregate, market capitalizations in excess of $1 billion. So he knows how to get it done, he knows how to raise money, he knows how to build profitable companies, and like I said, he's coming out of retirement for this one. The other thing that I like to see is nearly all the directors of the company own shares. So we want to see people that have skin in the game. And so when the directors of the company are buying the shares or holding the shares, that's typically a good sign. Like I said, they have money, they have skin in the game. Now the other thing is, I always say, is that I like to copy success. Success leaves clues. So you find other people that are successful, you do the same things they're doing, and you should have about the same results. And of course, we see that most of the successful mining companies are typically in the same zone. So if they're having good success there, then we want to go to the same place and do the same thing they're doing, and we should have the same success. And so they're working on already developed projects and putting them into mines. So we can see this is, as I said, the Holy Grail. right here. It's the region of gold, and it said they had Seabridge Gold. That's a really big one. They have a 1.7 billion market cap, is right there. Privitim Resources, a 2.25 billion market cap, is right there. Ascot Gold, a $450 million mine there. Tudor Gold, 420 million market cap mine, all in this area. So success leaves clues. We go to the successful areas and do the same things, and we should have about the same results. And it's made all the early shareholders of those other projects a massive fortune. And again, success leaves clues. Hopefully we could find the same thing with this one. Now, the outlook for gold is bright. Like I said, they're going to continue, the governments will continue printing money. This climate change bill alone wants to spend $150 trillion when the entire debt of the entire United States since the beginning of time is less than 30. And so they're going to continue to spend this much money. All the nations of the world will continue spending that much money, which will continue to push inflation higher, which will continue to push the demand for commodities, in my opinion anyway. And that makes it seem like we want to continue to buy commodities, and especially gold. We're going to continue to see, if they do rate hikes, that will be good for gold. And the problem is that, again, supply and demand. Remember, all price is determined by supply and demand. And we've seen that gold discoveries have been plunging in the last 10 years. So we don't have enough physical gold for the demand that's already there, which is a good thing. Now, I want to just bring up this other piece just to kind of show you something, because some of the key takeaways is a lot of times people think that it has to be about rates. So we need to see interest rates going down, or we need to see them moving higher for gold. But the reality is that other factors beyond rates, such as the supply and demand dynamics seen in most commodity markets, are likely to have a greater impact. So the supply and demand is really what drives the overall price the most. And so as we can see, the gold discoveries have been plunging, the demand is rising, especially now that we have all this jurisdictional risk happening outside the country, in different countries, and we'll have capital flying to countries that have better private property rates. So that's my thesis. I'm personally doing this in my own portfolio and what we have inside my private group, and you should be looking at your portfolios and doing the same thing as well. If you have any of those areas that you think are risky, let me know in the comments down below what you think about this. And of course, as always, give me a thumbs up on this video if you like it. And if you don't like the video, I guess that's okay. Give me a thumbs down. I'm okay with that. But at least leave me a comment and let me know why. And that's what I got for you today. All right, to your success. I'm out.